Hello everyone, welcome to the free video tonight for the futures markets. This is for tomorrow's trade, Tuesday the 18th, and this is for simpler futures. So I'm going to kind of get you ready for the week a little bit here. And in doing so, I do want to mention that there's some things going on a higher time frame on a monthly chart that have us experiencing right now. We've got some lower highs and actually some lower lows. This is a daily chart, but I just kind of want to show you a little bit of what it's looking like right now on the upper time frame. And as we zoom into this daily chart, you can see how the other day, we break for lower, leave the wick on the bottom. The next day, it's just the opposite, and with that, you leave wicks on both sides, and that's that candle was very, very negative at one point during its tenure there, and closed up just fine. This one was very, very positive and closed down, not so nicely. So anyway, what happens is you end up right in the middle there, and we call that stuck in the wicks. And it's not a fun place to be, because that is very indecisive trade. It's like, you get the bid that's rejected, and then you get the market breaks, but the break is met with responsive buying, and it's bid back higher. Trades higher, sellers respond, get responsive selling, sits it back down, and what do you end up with? Price in the middle, and nobody knows what to do. Call it stuck in the wicks. It's not fun. It's not a fun place to be and to try to figure out. So I look at the calendar, and I want to make you all aware of, if you don't already know, what's going on this week. You can go to Forex, Forex factory.com, and look at the calendar for the week, and see that we had a little bit of Fed speak today. Got a few things going on tomorrow. Got some news with some CPI and that kind of thing. Got some Chinese news. Got the big thing that has my attention is ECB on Thursday, and then the options expiration on Friday. So the ECB on Thursday can be literally, that's like a coin toss. I mean, that could be certainly a catalyst for the purpose of repricing, this market. Either way. But then on Friday, with the options expiration, historically we would trade higher into the expiration. But higher than what? I mean, higher than the latter part of last week. We're certainly, we're doing that already. I would like to see us close higher than the weekly open in addition to that. Okay, so that means we're closing above like the 21.25 level toward the latter part of the week. That does not mean, and we spent some time talking about this in the trade room, that does not mean that we don't have the opportunity to correct first. And how much? Well, on Thursday, with some potential for volatility like that, you could correct all the way down to literally like 2080, 2090, and then still bounce back with responsive buying, which has been what we've seen for years and years, now, like 8 years now. Every break has been met by responsive buying, and still we close higher on the week. So let's take a look at that and see what that looks like. What that looks like. And here we are. So on this SPX or S&P, it doesn't matter, it's all pretty much the same. But on the SPX here, you can see that the market's got priced in for the week here 25, 30 points. So let's say 30 points. Well, 30 points from a weekly open 25 could pretty easily run you down to just below the 2100 level, say 85. It's not a far stretch from this voodoo line that's waiting for us right down here at 2082, right? And it's just a gauge. Certainly the expected move doesn't have to be spot on, although it certainly is generally pretty accurate. What I'm getting at is I'm looking for a little bit of volatility, but in the latter part of the week. Other than that, I would imagine that it comes by way of some of the earnings that we'll have throughout the week. And with the expected move that we have, and the fact that I'm sharing this this upper time frame observation with you, I would not be at all surprised to see a market that trades lower before then ending on a decent note by trading higher to finish it off for the expiration. All right. And so far for the month of October, we have the most traded price, the balance in this market is up in the mid 50s up here. Okay, so that's a fair shot, north of where we're currently trading down here in the 2125s. Just so you have that frame of reference, that point of reference. That could happen tomorrow. I don't know. I just want you to be aware of the fact that we could see some volatility. We got the expected move that could certainly, with these observations, take us a little bit lower, maybe for a new lower low. For this last series anyway, lower low in this last series before correcting and finishing it off with all's fair in love and war and trading, and all of a sudden we're trading back at 2140 to finish it off, and it was a bullish week after all, right? So that's where I'm at, and I hope it helps. I would keep your eye on the treasuries. They have been quite volatile lately. They have come into an area of some decent probability for support, and if that's the case, then it's going to have them bounce back into a nice retracement of the last move, which was lower. That could have an impact also on this trade idea that I'm suggesting here in the S&P, so keep an eye on that. I'll go into more detail of that here in just a second. I'm going to hop over into the premium video and get into all that kind of stuff. I just wanted to get you started off hopefully on the right foot for the week. I'll be with you again tomorrow. Until then, meantime, good trading, and take care.